Hi there, Etoro. It is Monday the 14th of February 2022. Happy Valentine's Day. Let's take a look at what moved the markets last week. Last week was another rough week for the major indices. So on screen, the candles are the NDX, the Nasdaq 100. You can see the week started on the 7th of February, and by the end of Friday, this big chunky red candle, the index was quite a lot down for the week. I also have the SPX, S&P 500, that's the orange line on screen, and as well as the Nasdaq Composite. That's this teal color. So both of those also ended the week down, but not by as much. If we take a look at the price of commodities for the week, you can see that most of them have run green for the week. In particular, gold has done very well after being stuck in a range for a long time. And the 3-year return on gold isn't so great, but that's by the by. We can also see that the oil price has ticked up quite a lot. Now the markets are open today, and actually oil has dropped off a little bit since the market opened. But you can see that there's been a bit of a run to safe havens through the past week or so. In terms of Chinese stocks, so I think they have followed US just like the rest of the world has followed the US stocks through the past week, and they have dropped once again. This is the CSI 300, so the so-called equivalent of the S&P 500 for China, and this indices remains in bear market territory for now. So what happened over the past week to cause this incredible volatility? Although maybe it's not incredible, we're seeing volatility every week now. So there were a number of things. So Thursday was a big day for the market. It's kind of hard for you to see, I think, but so this daily candle here, the wick actually goes up to here. So the price of the NDX, the Nasdaq 100, ran quite high before reversing and giving back all its gains and then some on Thursday. Now, there were a few reasons for this. So first of all, the US's core CPI number came out, so the inflation number, and it was slightly higher than anticipated, although it was anticipated to be quite high. So the market really didn't like that, but I don't think we would have seen as an aggressive price move if that had been the only thing that happened. The second major event was Bullard, who is a president of the Federal Reserve Bank, saying that he would like to raise interest rates quite quickly. He has said that he would support raising interest rates by a full percent by the start of July. And this freaked the market out quite a lot. And the combination with the high CPI print sent the market a tumbling. The thing is that a few different people from the Fed quite soon after Bullard's comment came out and said that they weren't in a rush to increase rates, and that any decision would be data dependent, and that they understand that there is going to be some kind of a lag between taking an action and having that action work its way through the economy. And then came Friday. So Friday is the day with the biggest red candle for the week, quite a big drop. And I think this is because of everything that had happened before, but also because of rising tensions between Russia, Ukraine, and the various allies on either side of that crisis at the moment. You can see that UK stocks and European stocks today haven't liked this development either, but it's kind of strange to know exactly what is going on at the moment. The Western media seems to be pushing the message that an invasion is imminent, whereas Russia, the Ukraine, and a few others are saying that, to their knowledge, they're still in the talking phase, the diplomacy phase of this crisis. Whenever something like this happens, whenever we see these big moves in the stock market, it's always interesting to look at what is going on in bonds. So the 10-year yield here increased enormously on the 10th of February. So this means that people were selling out of bonds because they thought there were better places to put their money. And then the next day, we see the yield dropping enormously, nearly 6% in a single day. And the largest cause of this is likely because people are rushing to safe havens. So gold, oil, certain currencies, and bonds. Now, in this sea of negativity, I did want to point out a reason to be optimistic. I spoke last week about PMIs and the reports that you get specifically out of the US, the manufacturing and services PMI reports. And as a quick reminder, when the PMI is above 50, it means that that part of an economy is in expansion mode. And when the number is below 50, it means that it's in contraction mode. And when it drops below 50 and is sustained below 50 for a while, then we need to get worried about a coming recession. You should also note that certain countries are designated as manufacturing predominantly economies and services predominantly economies. So Germany, for example, is very strong when it comes to manufacturing, and the UK is very strong when it comes to services. But one thing you'll notice when you look at this table of PMIs is that they are predominantly pretty deep green for now, and there are actually only a few countries that have PMIs below 50 and not that far below either. This is telling us that economies are strong and will be strong for at least a while yet. So I think that's a key point to consider in being optimistic about risk assets. All right, what about this week? Well, obviously people are going to be heavily focused on the Russia-Ukraine conflict and how that develops. We also have a number of earnings coming out, so I don't have a hell of a lot of companies that are reporting this week, but there are companies that I earmark and I still read. I follow them even if I don't invest in them, either because I'm interested in investing in them at some point, or they are representative of a particular industry. So you'll see a number of familiar names on screen. It's going to be another busy week. In terms of economic data, there are lots of bits and pieces coming out this week, but I think that the ones that will be most keenly watched for the UK will be the CPI number on Wednesday. So this is the inflation number. And for the US, it's probably going to be mostly about retail sales for the coming week. Now, the UK Bank of England, the equivalent of the US's Fed, they've raised rates twice to 0.5%. They've been one of the more aggressive developed economies to do this. And depending on the outcome of the CPI print, I think it might become more likely that we will see another hike next month. People are already saying that they think it's likely to go up to 0.75% next month. Once again, 0.75% is still a very, very low number for an interest rate, but it does, the speed of the hikes within the UK tell you that they mean business. What's interesting is that they also expect inflation to peak soon after March, which is something that I've been saying for the past 2 months or so, that we'd see a couple quarters within 2022 where inflation would be increasing, but at a slower rate, and then it would eventually start to drop off. And finally, I wanted to talk about psychology, investor psychology. So year to date, the ETFs that I track and these indices are mostly in the deep red. The FTSE 100 is one of the few that are showing green for the year. But the Nasdaq, the composite, the Nasdaq 100, the S&P 500, they're all fairly deep in the red for the year. This makes people nervous, it makes them frustrated, it makes them worried. Is this just the beginning of the end and it's going to get worse? But the irony is that the longer that a pullback goes on for, and the deeper that pullback is, the better it is for the future of the stocks and indices that are being affected. I encourage you to go back through your index of choice, or maybe there's a very successful company that you're fond of, and look at their stock prices, look at the deepest drawdowns that they ever went through, and then what happened subsequently. Yes, you have to be disciplined. Yes, you have to be patient. But if the companies that you own are good quality companies, they will be successful and their share price will eventually reflect that. You cannot control the things that are going on in the world. You cannot control inflation. You cannot control who's at war with who, but you can control the companies that you choose to invest in. All right, that's it for this week. I hope you have a good one, and I'll speak to you soon. Goodbye.